Okay, let's unpack this. Imagine a healthcare giant losing exclusivity on a multi-billion dollar product like Stelara.
Their huge inflammatory disease drug,
Exactly. Now imagine them not just weathering that storm, but actually accelerating overall growth.
which sounds almost impossible.
Right. But Johnson & Johnson just did exactly that in Q2 2025.
It's really fascinating. What strikes me is how their, strategic bets on innovative medicine and cutting-edge medtech aren't just filling that massive gap.
They're actually driving growth.
Yeah, driving surprising overall expansion.
Yeah.
We'll explore how they pulled this off in our deep dive for you today.
It's quite a feat, isn't it? Johnson & Johnson's Q2 results, they really feel like a masterclass in foresight and diversification.
Absolutely.
They reported worldwide sales of $23.7 billion. That's 4.6% operational growth.
Which is solid on its own.
It is, especially when you consider they faced about a 7.1% drag on sales, specifically from Stelara losing exclusivity. It's like watching financial chess, almost.
It really is. And the CEO pointed out, no other healthcare company has managed to grow through the first year of a multi-billion-dollar LOE.
And J&J's done it for 2 quarters straight now.
2 quarters straight. And what's even more telling, I think, is their innovative medicine segment. For the first time ever, it brought in over $15 billion in quarterly sales.
Wow, $15 billion.
It's a 3.8% operational increase, even with an 11.7% headwind just from Stelara.
So if you take Stelara out of the equation.
Well, if you isolate the other 90% of their business, the part not hit by Stelara, that part saw, get this, 15.5% growth. Exceptionally robust.
15.5%, that is an enormous number.
It's huge.
Yeah.
And it really shows the power of that deliberate strategy they've been building for years.
It speaks to the sheer depth of their portfolio, doesn't it? You mentioned, 13 different innovative medicine brands showing double-digit growth.
13, yeah, all pulling significant weight.
Okay, so let's dive into some of those key areas. Maybe start with oncology. J&J has this ambitious goal, right?
Yeah.
To be #1 by 2030.
Over $50 billion in sales target. Very ambitious.
So how are they positioning themselves for that? How did Q2 look?
Q2 oncology results suggest they're, definitely on track. Operational sales growth was 22.3%.
22% growth in oncology alone.
Yeah. And it's driven by a really comprehensive approach. Blood cancers, like multiple myeloma, solid tumors, the works. What's quite remarkable is that something like 80% of multiple myeloma patients today get a J&J medicine at some point.
80%. That's incredible market penetration.
Crucial for that long-term goal.
And they're clearly not, resting on their laurels there. I saw they released new 5-year data on CAR-VYKTI, their CAR-T therapy.
That's right, the one where they engineer a patient's own immune cells.
Showing potential for long-term remission. And its sales more than doubled this quarter.
More than doubled, yeah. Huge growth. Plus, they presented data on an investigational trispecific antibody.
Trispecific, so it hits 3 targets at once.
Yeah, exactly, for a potentially more powerful effect. And it achieved, an unprecedented 100% overall response rate in really heavily pretreated patients.
100% response. How much closer does that bring them to that audacious goal of actually curing multiple myeloma?
I mean, it brings them significantly closer. It really highlights their commitment to therapies that could be truly transformative, not just incremental.
And it's not just myeloma, right? What about other cancers?
Right. In lung cancer, their chemotherapy-free combo, Rybrevant plus Lumicrous, is projecting over a year of overall survival for certain frontline patients.
Patients with specific EGFR gene mutations, yeah.
Exactly. That combination also saw sales more than double this quarter.
Another one doubling.
And then in bladder cancer, they got FDA priority review for TAR-200.
Oh, yeah. The drug releasing system, first of its kind.
That's the one. They expect to launch it later this year. They're projecting at least $5 billion in annual peak sales. Big unmet need there.
$5 billion peak potential. Okay. So oncology is clearly firing on all cylinders. But beyond cancer, their strength in immunology, that's been core for decades, hasn't it?
Oh, absolutely. 25 years they've been leaders there, and it's proving just as vital now.
So how's that playing out with the Stelara decline?
Well, Tremfya, their key therapy for inflammatory conditions, grew over 30% this quarter.
30% for Tremfya.
30.1%, yeah. Especially strong uptake in the newer indications like Crohn's disease and ulcerative colitis. They think it could hit at least $10 billion annually at its peak.
Another potential $10 billion drug.
Exactly. And this really underscores that diversification strategy we talked about. Yes, Stelara sales dropped significantly, about 43.2%.
43%? Wow. Due to biosimilars and the Part D changes?
Right, biosimilar competition and the Part D redesign. But the accelerated growth of products like Tremfya and also pipeline innovations like Ecthiokinra are crucial offsets.
Ecthiokinra, that's the new oral peptide for psoriasis.
Yet, targeted oral peptide, they plan to file it with the FDA in Q3. The aim is, a new standard, a once-a-day pill with efficacy, like a biologic injection.
Which would be huge for patients, right?
Massive benefit, yeah. Convenience and efficacy.
Okay, moving on. Neuroscience. They're setting ambitious goals there too, aren't they? Aiming for #1 by the end of the decade.
They are. And you see momentum. Spravato, for treatment-resistant depression, grew 53% this quarter. Strong demand.
53% growth for Spravato, and they made that acquisition too. Intracellular therapies.
Yes, that adds Capulida to their portfolio. It treats schizophrenia and bipolar depression.
And they're expecting another approval.
For major depressive disorder, likely later this year. Capulida itself has a potential of $5 billion plus peak year sales. It really solidifies their growth path through the decade by broadening their reach in mental health.
So the innovative medicine pipeline is clearly, well, booming. But let's not forget MedTech. You mentioned cutting-edge MedTech earlier as being just as vital.
Absolutely critical.
That segment brought in $8.5 billion in sales this quarter, 6.1% operational growth worldwide.
Yeah.
So what are the key innovations there that are really, setting J&J apart?
Well, MedTech's growth is largely coming from strong performance in cardiovascular, surgery, and vision. Cardiovascular especially delivered over 22% operational sales growth.
22% in cardiovascular alone. That's impressive.
It is. Driven by new products from a biomed that saw nearly 17% growth and also the acquired Shockwave business.
Yes, Shockwave. That continues its strong double-digit growth.
It does. And they expect it to become a $13 billion medtech platform by the end of the year. Shockwave's tech for calcified plaque is genuinely innovative.
Reduces the need for more invasive stuff, right?
Exactly. Then you've got electrophysiology, that's the heart's electrical activity field, grew nearly 10%.
Driven by new products there, too.
Yeah, new product performance, strength, and mapping. They've done over 10,000 Varipulse cases globally now.
Varipulse, that's the pulsed field ablation system.
All right. And the safety looks good. A neurovascular's vent rate under 0.5%. Very encouraging. They also introduced the dual energy thermocool smart touch SF catheter and Omnipulse, more tools for treating irregular heart rhythms.
Okay, what about surgery? Anything new happening there?
Oh yeah. They launched the Ethicon 4000 surgical stapler, designed to minimize common issues like surgical leaks.
Which is a big deal for patient recovery.
A very big deal. And what's particularly forward-looking is that this advanced stapling tech will be integrated exclusively with their Ottava robotic surgery system.
Ottava, right, their robotics platform. How's that progressing?
It just completed its first clinical cases, gastric bypass surgeries, and they plan to submit for FDA de novo approval next year.
De novo, so for a totally new type of device.
Exactly. It's a clear push towards a more, connected, intelligent operating room.
And finally, vision. How did that segment do?
Pretty solid. 4.6% quarterly growth across the board and nearly 9% in surgical vision specifically.
Driven by
Their AccuView OASS Max 1-Day contacts the ones for challenging environments and their Technis intraocular lenses for cataract surgery. They even launched the first disposable multifocal lenses for people with astigmatism this quarter.
addressing another complex need.
Right. So overall, you see this impressive performance across both innovative medicine and medtech. It really shows how that broad portfolio helps manage risk while fueling growth. It's a story of strategic resilience, really.
So, putting it all together, what does this all mean? We've seen how Johnson & Johnson is navigating these really tough competitive headwinds, like the Stelara Loe.
Major headwind.
Yet, they're still raising their full-year guidance. Sales up by $2 billion, adjusted EPS guidance up 0.25 cents.
Which is quite confident given the circumstances.
Definitely. All while pushing major new products to market, like the promising bladder cancer treatment TAR 200 and the Ethicon 4000 stapler in MedTech.
And if you connect this to the bigger picture, it just highlights how having that deep diversified portfolio, everything from explosive growth, CAR-T therapies like CARVYKTI, with sales more than doubling, right?
Right.
To advanced robotic surgery systems like Ottava, it lets a company constantly reinvent itself, overcome really significant market challenges.
It really does.
And this raises, I think, an important question for you listening. What really stands out to you about the power of this kind of sustained innovation, this strategic diversification, especially when facing major market shifts, like a key product losing its exclusivity?